Saurabh Mukherjea, good morning. Thank you for joining us. We have not heard anything significant on the economy so far from the Prime Minister or the Finance Minister. Yes, yesterday there was a mention of a task force, but is that good enough? Given that how global governments are adopting this approach of we will do whatever it takes to fix things.
I think, in a way, the most significant thing I took away from the speech last night was, given that the whole world is perplexed as to why haven't more people died in India, right? This is genuinely astonishing. There is no other large economy in Asia which has been left unscathed. And yet we are, 3 months into a global crisis. And so far we have 4 or 5 deaths. Even if you assume that the numbers are being vastly underreported, even then it's genuinely astonishing what's happening here. And I think what the Prime Minister seems to reinforce last night is that if we are careful over the next 2-3 weeks, we maintain social distancing, do the Janta curfew, work from home, if we can keep this death rate under control over the next 2 or 3 critical weeks, honestly, I think the tide will turn, both in terms of global investor sentiment vis-a-vis India, because this is genuinely astonishing. I think there's a degree of stunned reactions across the world as to why this hasn't spread more. If we can maintain this degree of lockdown and control, I think that itself is going to be the biggest source of relief. That apart, actually, the bigger challenge, I think, for us is not so much the real economy. The real economy, yes, people are going through distress, and I suspect, as your colleague was saying, Nikunj, we will hear about relief measures for low-income people. I think the bigger challenge will be the money market. The bond market is backing up in our country, and wholesale-funded banks and lenders are going to face issues unless the RBI can do something to price open the wholesale lending market. Part of it is liquidity, part of it is addressing fears, but part of it is also, working from home. It's not easy to keep the CP and the CD market going. So I think therein lies, I think, quite a tricky challenge. If the CP and CD market continues to be in this sort of freeze mode, then financing for NBFCs, financing for some of the private banks becomes very, very difficult. And that in turn actually has a fairly serious impact on the economy. So rate cuts from the RBI, liquidity infusions, and a more practical way of how do we deal with this wholesale money market shutdown. I think this is actually quite a big deal. And hopefully in the next 3, 4, 5 days, the RBI will come forth and tell us something about this. The task force that the PM mentioned last night, I think their job will be to address the pain that low-income workers must be feeling across the country.
I respect that, Saurabh, and that's the right thing. But my limited point is that whenever things will come, whenever the task force will come out with their findings, when grants and other relief measures are given to the economy, won't it be too late? Because we are already in this semi-shutdown mode. Whether it's job losses or the impact on the real economy or the way consumption would decline, do you think something big bang needs to be done now and not wait for findings and not wait for more time?
I'm not so sure we need to sort of do the big bang now. One of the reasons I'm relatively confident about the resilience of our economy is, I lived and learned through the experience. Demonetization pretty much shut down the economy for at least 4 weeks, some would say 2 months, and yet not only did corporate earnings growth bounce back, GDP growth that year was a healthy 7%. So if we could deal with something as powerful as demon, a 2-week, 3-week economic lockdown from coronavirus, I think is far more tractable. Secondly, various companies are doing their corona conference calls. Some happened yesterday. I think there's some more scheduled today. And whether it's banks are saying repayments are continuing. Whether it is retailers who are saying customers continue to buy goods. In fact, as we know, there's a degree of panic shopping. Whether it is staffing companies, they continue to report that there are reasonable levels of interest in hiring people. The data from companies doesn't suggest a complete economic lockdown. Data from companies suggests that, by and large, people are continuing to do what they were doing as economic agents. So I'm not so sure we should press the panic button just yet on a big bang economic measure, partly because of what demonetization taught us, partly because what corporates are saying vis-a-vis economic activity in our country that doesn't seem to have come to a grinding halt. in March. Remember, supplies from China have resumed quite nicely through the last 3 weeks. So whoever was importing from China, supplies from China have started normalizing. So a big part of the economic disruption on that front has already been addressed by China getting back to a degree of normalcy.
As an investor, though, Saurabh, where do you think the first signs of recovery coming in? On-ground observations, I completely agree with you. But, right now, you've got just about every sector, barring an odd ITC, which had a, dividend adjustment, which is why I guess the stock went up yesterday, or a Yes Bank, which is a completely special situation stock. You've got just everything getting battered and bruised. In terms of the economic sectors, where can we expect, aligned with the stock market recovery, the first, signs of a rebound coming in?
One will be FPI buying. So, as I was saying, that the whole world, including foreign investors, are watching very carefully. If over the next 2 weeks deaths in India don't escalate, I'm pretty confident you'll see a resumption in FII buying, because obviously the underlying endowment funds and pension funds who give money to foreign funds, they are also trying to figure out how do we make money over the next year or two with US treasuries in the negative, even bond prices falling in the West. How can I make money if I'm a pension fund or an endowment fund manager? And if they see that India seems to have the healthcare situation under control on coronavirus, as the number of deaths don't escalate, I'm pretty confident you'll see a resumption in FII buying. But the other way to gauge a degree of normalcy returning to day-to-day life, leaving aside stock markets, would be, looking at our roads and airports, and if 2, 3, 4 weeks out, we're able to get a degree of traffic moving through our transport system. If life sort of recovers relatively normal footing in urban India, that too will be a very powerful sign of relief for the stock market. But tracking the healthcare situation, this is what every investor is doing at the moment. Several newspapers and websites are carrying daily data on deaths by country. Unfortunately, that's become a big part of how investors are going to gauge us. If we don't see deaths spiraling in India, that exponential curve that other countries have taken, if we don't get on that curve, if we can keep this under control, we will see FII buying come back pretty strongly through April.
Sure. And where would the buying come in first? Not just from an FII perspective, Saurabh, but DIIs as well.
Yeah.
Do you think it would be the blue chip names which have high FII concentration? Are they likely to be bounce back first?
Yeah. So there, actually, the template is pretty nicely laid out. If you look at the .com, the recovery from the .com bust, the recovery from the 9/11 trauma, right? So the 2003-4 recovery, or indeed the recovery from Lehman, the earliest FII money goes into companies who've been able to continue growing earnings through difficult times, and their prices are pulled back. Classic example is HDFC Bank. I think HDFC Bank profits, the current fiscal, are likely to rise somewhere in the vicinity of 40-45%, but in Asian Paints profits are likely to rise in the vicinity of 50%. HDFC Bank stock would be down 20-odd% in the current fiscal. Asian Paint stock has barely risen after the recent pullback. So these are if I look back at the data from 2000 or 2008, the sharpest rallies in the first flush of FII money come back is that it floods into these stocks because they know these names. They can see the P's have pulled back optically. They can see the business is in great shape, and they flood into these names. So if we can keep this remarkable track record that we have built up on coronavirus, absolutely amazing track record, let's hope to God this track record continues. If we can keep this going, we will see a very sharp inflow of foreign money. And my reckoning is it will go into the sorts of stocks I've discussed on your channel over the years, the sorts of stocks that we own in our portfolio by the bucket load, the HDFC Bank, Asian Paints types names.
All right. Yes, indeed. That will have to be very crucially monitored. I think the true test will be in the next couple of weeks. But thank you, Saurabh, for taking time out and giving us your take.